Creo que ya tenemos conectado con nosotros a Jay Pelosky, es el fundador de TPW Advisory. Jay, thank you so much for having us a few minutes.
Nice to see you again.
Jay, we are seeing sharp falls in Wall Street today, not only in US, in Europe we are seeing big drops today. What do you expect from a day like today with all these falls?
Well, I think it's obviously a heavy selling day. Not a whole lot of buyers around, and you can tell that by the big declines in pretty much every asset. One thing that's very interesting is that it really is a cross-asset sell-off. So stocks are down big, bonds are down big, commodities are even down big. So the three indices, stocks, bonds, and commodities, are all down significantly today. And it's a bit of a surprise to me, actually, because the selling on Thursday and Friday last week was the worst two-day back-to-back selling of the S&P in over 2 years, really since the lows of COVID. So I'm a little bit surprised at how aggressive the selling is today, particularly when we have a pretty good idea, I think, of what Chair Powell and the Fed will do on Wednesday, which is raise 50 basis points. So I have to say I'm a little bit surprised at the severity of the selling.
Jay, Elon Musk is warning to its employees of Tesla's very tough quarter. Could we expect a profit warning soon in Tesla?
You know, I don't really know about Tesla specifically. I mean, I would think that for the most part, electric vehicle demand is at record levels. That's clear. The majority of new car buyers around the world for the first time ever want to own an electric vehicle. And Tesla, with its production in Asia, Europe, and the Americas, is really one of the first what we call tripolar world companies with production in each area. But there is a lot of concern to the bigger point about earnings, and that's where I think most investors today are getting very concerned. Even though LPL and other research firms, including JP Morgan, have shown that earnings expectations or earnings revisions remain quite robust. Earnings growth in Q1 in the U.S. was up on 9%. And the expectation is that earnings continue to be relatively robust given the high nominal growth environment that we have in. And that's going to be the difference. If we have to really mark down earnings because we're going into recession, then stocks are probably going to have to fall more. If we avert a recession and earnings are able to stabilize, given that high nominal growth, given heavy consumption, strong demand, then we're probably trying to still be in that bottoming process with global equities.
Jay, this Thursday we have on the table the monetary policy meeting at the Federal Reserve. Markets are expecting new interest rate hikes at 50 basic points. Is there any message that may surprise us from Jerome Powell this Thursday?
Well, I think there's clearly going to be the rate increase, as you said. I think that still the majority of folks expect 50 basis points. I would be surprised if the Fed were to raise 75 basis points. I think that would be a little bit too reactive. I think there's a sense that we're going to get 50 basis points in June, 50 in July, and then we'll see where we are as we go into the summer and where we are at Jackson Hole. But I think also the Fed is going to release new forecasts for growth and inflation. And I think people will be looking at that very carefully. Clearly, fixed income markets are leading the way here. The two-year Treasury note, or two-year Treasury bond, rather, has expanded its rate by almost 280 basis points over the last couple of months since the Fed started to hike. That is a very, very aggressive and ahistorical increase in a very short period of time, typically in the first couple of months of a Fed tightening cycle, the 2-year goes up less than 100 basis points. In this cycle, we're up almost 300 basis points. So I think we've gone a very long way towards a Fed that's likely to raise rates, going forward for the next several months and probably the next several quarters.
Jay Pelosky from TPW Advisory, thank you so much as always.
Thank you. Pleasure to speak with you.